Alright, we're looking at S&P 500 and mini futures. The uptrend played out with the break moved to a new high, followed by downtrend playing out with the break moved to a new extreme. And what is the overall big pattern, big structure? Well, it is consolidation, a trend range, which is important because since there is no trending market today, it means once there is a break in new extreme for the trend, market tends to pivot fairly frequently because this is how prices behave in trend ranges. Prices pivot up and down, up and down. So now we had short-term bias that was bullish, break a new high, trendline rule played out, short-term downtrend, break a new low, trendline rule played out, and right now we can have correction or reversal. And because prices are breaking back above the EMA, this is right now confirming, okay, downtrend played out, strong push above EMA, and we are right now having short-term bullish bias because we expect new high to be tested. So this is how we are going to be following the trendline rule inside of the trend range. We have a new low, first entry short, pullback, second entry short, further. So this right here would be a failed second entry short reversal pattern, which is a great setup context-wise, but the signal bar is an inside bar, which is not ideal. You can still consider because the trade still didn't end up being a losing trade because you keep your stop loss one tick below the signal bar. As you can see, you're still safe. But now you have a better setup. You have a new high, first entry long, pullback, second entry long. EMA keeps holding once, twice, and the longs, the bulls who bought the failed second entry short after downtrend played out and pushed above EMA, they are still holding their trades, their positions. So you can ride away with them. And this right here is a second entry long continuation of the failed second entry short. First, great high probability setup because everything in price action aligned. Downtrend played out and push above EMA is indicating reversal. And with a great trade break, move to new high, so uptrend played out. And because price is completely sliced through the exponential moving average, right now this is indicating, okay, there is truly breaking new high, no wider uptrend. And right now it is behaving as you would expect in a trend range. Prices keep pivoting upon reaching a new extreme. So I have to redraw right now a brand new short-term downtrend because I never want to have these candles on a chart without a pattern. Okay, even though the big structure is consolidation, you still want to follow the short-term trendline rule. Break, new extreme, so downtrend played out. And now we have great push above EMA, so I'm going to connect the lows again, looking for market geometry. And right now, once again, break, new low, repeat pattern of what happened here. We're pushing above EMA, which is confirming bullish reversal, new low, first entry short. So it's going through my mind, I would like to see a failed second entry short, but there is no break above this bullish bar. There is no failed second entry short triggering above the bullish bar. As a bull, I need to buy above this bullish bar. So no good entry. And now we have, once again, the repeat pattern. What happened here is happening here. It is very similar. We have a second entry long. Now this one is a little bit hard to take because we broke below EMA first. Here, this is what you want to see more. EMA keeps holding, providing support. Here, you broke below EMA, which is not that great. But because market will pivot and we have uptrend that needs to get new high, this is decent high protest. I would make it a little bit more aggressive given the fact it formed below EMA. It is managing to close above EMA, which is good, but this is basically a repeat pattern of what happened here. Great push higher, break, new high. Market keeps pivoting lower, so I'm going to redraw a short-term downtrend working lower. And now we have lower high. This is structural based lower high because prices keep oscillating up and down, up and down. And once there is a break, move to an extreme, bulls have no reason for prices to continue going higher. Probably to like a pullback. This is not super textbook high probability setup because it is more context based, but there is no reason for bulls to go higher. This is a trend range, prices keep pivoting. We're following the short-term trend line rule, and this is decent lower high confirmation setup. So we're just following the short-term trend lines. Break. We expect second entry short because this downtrend needs to get new extreme. So you can see prices keep following the trend line rule, but by the time we get a second entry short, it is this horrible bullish bar followed by inside bar, even worse, till it's at the bottom. You can't take it. So even though it worked, there is no way for us. The signal bar is horrible. I can't really take it. Push above EMA once again. New low was tested. Break, new extreme, and now we have first entry short, second entry short further. We have again failed second entry short. I took this setup myself, but because the bar is quite big, over 3 points, I use deeper limit order, which is kind of must here because you're closing a little bit too far up at the top of the move. So if you're going to use limit order, you can take. I took this setup myself. Actually, I'm gonna mark it more green, but you need to use the limit order because you can also see how prices are starting to lose the momentum. It's about to get more veggie, so the strength is dissipating and you gotta be careful. I barely got out of this trade. It worked just enough for a scalp, and suddenly market continued to work lower. So now what I have to do is I see flat EMA and I can see small support here. And why am I drawing the resistance? It's important because it's going to help me to identify what is the bias in this market. Because right now we have downtrend playing out with the break, move to new extreme. And can you go long here? Okay, this is the question that you're going to ask yourself. Can I go long? You cannot. And there are reasons why you need to skip going long here. Because notice why this uptrend didn't get a new high. Every single short-term trend line here had a break and new extreme. This is the only uptrend that didn't get a retest and we traded down, which is indicating what? Bearish pressure. If I'm going to take a look at the structure of this trading range, I can see that every single major high is lower and lower and lower. In fact, the resistance has only 1 bounce here. Okay, there's empty room here. So this is indicating bearish imbalance. So I cannot go long here because this uptrend to get new high indicating bearish pressure, and we have lower highs indicating market may most likely broke lower. So I'm just going to be waiting. Okay, prices keep breaking lower, so what I'm going to do, I'm going to redraw the short-term downtrend, something like this. The bias right now is bearish. This is the low of the day key level. We have a second entry short, but once again, I can't take so far from the EMA, horrible inside bar. I can't take it. This is far from the EMA, inside bar. Break, almost double chat, but a horrible bullish bar. I cannot go short below this horrible bar, so I just need to be patient. I want to see a lower high confirmation setup. That's not forming. Break and move to new extreme. Downtrend played out. So right now, because the downtrend played out, I'm going to pause looking to go short because we can have correction or reversal. So let's see what's going to happen. Flat EMA, horrible congestion. I took this lower high. It was a bad impulsive trade. We have a break in new extreme. Flat EMA, market is going to correct or reverse. You know, I'm not even going to mark it because this is so congested, more aggressive. But I just want to point out that I took an impulsive trade here. Now I don't want to take any setup because it's just so stacked. No bias. It's too flat to draw any wider channel. And right now prices keep trending lower. So if I'm going to zoom out, I can see there is still bearish bias. Okay, quite significant one. In fact, it is starting to turn into trending market. So we started with the trend range. We're following short-term trend line rule. So right now, once again, candles on the chart. I'm going to connect the first two swings. I'm going to copy it, put it at the bottom. Okay, I cannot take first entry short, new low, first entry short, second entry short above EMA, so this is not great. And now we have lower high confirmation setup of the second entry short. This downtrend needs to get new extreme according to trendline rule. It take one tick higher, trap all the bulls, reverse down, great signal bar. This is great high probability setup. Lower high, we expect new extreme, and the uptrend played out with the break and the new high. So great lower high, downtrend played out with the break and move to a new extreme. If I'm going to measure the measure lag, we way overshot it. Actually, not that much. So breaking new lows, I'm going to do, I'm going to pause looking to go short because we can have correction or reversal. So I'm not buying. It was too bearish. I'm not selling. Downtrend played out. I can also draw a little bit wider channel. Let me see. I can draw bigger channel like this, which you would end up having an overshoot. Okay. Actually, I'm going to draw it a little bit shorter so it doesn't clutter the chart. So downtrend with the break, overshoot here, so we can have stronger pullback in the opposite direction. So now I'm going to connect these swings. I'm going to copy it, and we have overshoot. But because prices keep working higher and we keep working higher, it's not acting as overshoot. I'm going to widen it because it makes sense, like we can have right now stronger bullish uptrend. I'm going to redraw the short-term downtrend, break, clear two legs, and this is great setup. One leg down, second leg down, new high, first entry long, second entry long, off the trend line, off the EMA, and off the low of the day kilo. So we have three key entry points. The more key entry points you have, the better. Downtrend played out with the break new extreme. It aligns nicely with the EMA. Great. Second entry long. Uptrend is in play. Okay, now we have another second entry long, but the single bar is horrible. This is example why you need to go long above bullish bar, almost new high, and prices keep reversing. Now we actually had quite tempting filled second entry long because the main downtrend may need to get new low, and uptrend played out, but it is forming quite low. You're selling at the bottom of the move. You know, what if there is some support here? There is no clear distinct breaking new high. You can cut it a little bit like this, but you know, you're cutting a little bit. It is not clear whether the uptrend truly played out significantly. So tempting setup a little bit too early. Can we get a lower high? Okay, since you're pushing too far down, I want to see right now a second entry short at the EMA, but I can't get a second entry short at the EMA because we just have first entries. Prices keep trending lower. No second entry short. I can extend it just a little bit. Okay, actually we have small break and the new extreme. I remember this. It is very close. Small break, new low. And because downtrend played out with the break and new extreme, this is why I'm leaning more, treating this as a break and new low. Because this downtrend played out with the break and new low, and we can have correction or reversal. There could have been almost second entry short. Had there been some decent second entry short, you can consider selling very close to EMA, because sometimes even the secondary leg will get to test the new extreme. But there was only first entry short. Significant push down. You have a second entry short here, but now you can't take it because it is too wide. The first entry short generated such a strong push down, almost creating double bottom. It still worked for a scalp, but it's not a good setup to consider. So right now, let's see what's gonna happen. And now all downtrends played out, but we keep working lower, so I cannot go long, but at the same time, I cannot sell because I don't have no downtrend to build confidence that I can keep selling. You know, so this is a long area of development. This is where you have to be patient because the whole day it is easy to find a pattern, and now there is no good pattern. It's too bearish, the daily bias, to be thinking about picking bottom. But at the same time, all downtrends played out, so I cannot look for short entries. So no good setup here, no nothing. You know, this is very choppy area. There's a new high first entry long, second entry long. There's a decent high low, which is tempting. Problem is there is no good uptrend to support it. This one has a breaking new high. I can draw another leg like this, but you know, this is way more subjective. This uptrend played out to breaking new high. It is a high low, which is safer after second entry long, so more advanced trader can consider. But overall, it is better to be patient here. Okay, downtrend is reversing. Spike and a channel pattern. Can get a second entry short at the EMA. No second entry short. Market is reversing. I have to redraw a brand new uptrend to the upside. New high first entry long. I want to see second entry long at the EMA because uptrend needs to get new high tested. Can we pull back to the EMA? Too far from the EMA, I cannot take it. It worked this time, but next time it may trap you, so you cannot go long. Break a new high. Okay, so I cannot go long anymore because we have a break a new high. Now once again, we have a break a new high without touching the EMA, so sometimes the traders still want to see the significant technical push after stronger pullback, but still there is no good setup to go long. Market is reversing to the downside. Clean downtrend working lower, so just like here, uptrend break a new high, downtrend break, so we expect new low to be tested. New low, first entry short, pullback, and now we have second entry short at the EMA, clear. Textbook signal bar. This is perfect setup. It's just enough time before the market's gonna close, and this is great second entry short. Downtrend is new low, perfect signal bar, break, new extreme tested, and market is about to close. So this is the overall structure for today. Very predictable price action the first half. A lot of setups in the trend range on the way down, but once we have a break, move to a new extreme, and the main downtrend played out, there's pretty much no good easy setup because trend lines are ambiguous. Market is very neutral because there is no bias. You can see the market ended up going very sideways. So typical behavior after breaking new extreme, brand new market cycle may kick in, consolidation or reversal. But remember, when you are trading a trend range like this, you're following short-term trend lines, and once there's a break in new extreme followed by push below EMA, The push below EMA is important. Okay, break new low, push above EMAs indicating reversal. Break new high, push below EMAs indicating reversal. Break new low, and push above EMAs indicating reversal. So this is how you follow the short-term trendline rule inside of the trading range. So I hope you had a good trading day. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.